Welcome everybody, this is Mike Hamilton for Trade the Easy Way, and I'm going to just show you what I'm seeing in these markets as we prepare for the week ahead, with a Fed rate decision on Wednesday, a couple of hours before the markets close. And before I forget, don't forget that the Dow is now opening 1:30 UK time, 2:30 European time, because our clocks have gone back and the US hasn't. So by the time I get used to it, of course, the US will turn their clocks back. That happens in a couple of weeks' time. Alright, but we're looking at the dollar index, and you see the dollar index has pushed up, primarily on the back of the euro, because the euro are threatening to increase easing, quantitative easing, and printing more money, so the dollar has seen some strength. But I think the likelihood of a US rate rise anytime soon is slim, because of what's going on in the economy overall. Got to bear in mind a few factors here. The bond market needs to be sustained in the emerging markets, and one of the reasons why the emerging markets have had problems this year is the fact that they've seen a lot of exodus of money out of their bond market, and their bond market has been deflated, which basically you need a good strong bond market for a healthy indices and an economy, because it sustains a cheaper level of debt. If you've got an $18 trillion sovereign debt like the US, that is a pretty important factor. They're currently paying $400 billion in interest payments to sustain the $18 trillion debt they've got. So for the US to raise rates is going to potentially be a dramatic increase in the debt repayment of that sovereign debt, and they're going to have to raise the money to go and find that increase. So that will be increasing taxes and so on, which will just penalise the economy. So I think it's a complex web going on out there at the moment, but bottom line is, as far as you're concerned, is I don't think the US will raise rates, and hence the reason why, despite the fact we've got the rate decision coming up on Wednesday, the indices, particularly the Nasdaq, has been incredibly strong. So let's just pull back a bit and see what leaves us with some of the charts. So you can see on this euro we've had 2 days of heavy selling. As usual with Mondays, or typically on Mondays, we've got very little data. So I will just look at the market when the US opens and see where we are when we've got at least half an hour behind us of the US market open. I think we will potentially drift lower in the first part of the week, but if the US do not raise rates, I think we'll see a pullback to somewhere around the 200 mark, the underside of this trend line, the higher trend line. RSI is already quite low here. We are nearly 500 points off the highs from this resistance line up here. So it's tricky, because to get into this trade now, you'll be selling very, very low, and that is not a sensible thing to do. So if you're not in this trade, I would wait until, I think the trick is going to be to wait until the Fed announcement, and then look at this for any pullbacks into that resistance area. Pound, I think the pound is in a huge box. If you look at this big black box I've got here at 156 at the highs and 148.80 at the lows, we have had a couple of excursions the other side of it. We had 1, 2, 3 excursions the other side of it, and 1, 2 to underneath it. But primarily, since we started 2015, this has been the main sort of medium of the range of the pound US dollar. And at the moment we are just coming into the 50% fibs. So we're coming into the actual mean level of this 2015 range. So if we find the 50% in come the Wednesday, and the rate decision is for no rate change, then I think this pound could start to at least come back and retest 153.75, at which point the market's going to make its mind up. So here we are with 1, 2, 3, 4 waves at the moment. We're into the 5th wave. So my main message to you has got to be, you know, it's short. Fifth wave could be very powerful, so look for 153.75 to get short. If you're a swing trader, you're going to have to get a stop above 156, and then see if that can start to just wind its way down to 150. Alright, contrary to the other side of that is I'm swing long the pound yen. I think the yen is potentially going to get a lot weaker. This is a nice three-wave pattern. We're stuck in some resistance areas at the moment, so a little bit of a hangman bar there on Friday. No follow through on Friday. So just look out for 185. And if 185 holds, then I think we could bust up and back up to these highs. And potentially, I mean, I think in the not too distant future, we are actually going to see 200. So wave count for this one is 1, 2, 3, 4, and we're in the fifth wave to the upside on this one, but just getting very hesitant at the moment. And I don't think that is unusual. I think we may well see 185, maybe a little lower. A little lower would be perfect. At which point I will increase my position and see if I can get in on that. I am just trading around it. Yeah, I am sort of buying and selling little ranges in between this, because you'll typically get, in the middle of a leg like that, you'll typically get three waves within a wave. Here you had 1, 2, 3, 4, 5, and so far we've had 1, 2, 3, 4, and this is the fifth wave. That's pretty typical. No need to be too scientific about these. The bottom line is the main aspect of trading is support and resistance. So let's get the week open and let's see if we can get a good entry in the start of the week. There's the weekly chart here on the right, and 185 is the highs of the last 2 weeks. So 185 is a massive number, and here on the 4-hour chart, we've got the golden cross here on the 4-hour chart to the left of your screens, and that is doing well. Okay, so I like the Euro US to the short side, I like the pound yen to the long side. So we'll have a quick look at the obvious pair to trade out of that would be the Euro pound, and you can see that is on that support. A little bit of it's finding some support here at 72. But any pullback into this resistance area here at 72.50, 73 is to be shorted to see if this can come down to at least 70. Let's have a look at a couple of other charts. Let's just take a look at the oil. I don't think the oil can do it. I don't think the oil can push up here at the moment. Because we are 1, 2, 3, 4, 5. 1, 2, 3 ways to the downside. 4 would be a push back into about 47. 5 could see that drop back down to this support. For me to be a buyer of that one, it is a hammer-like bar, I must admit, and there's huge amount of support down here. But I am just concentrating on this level, and then let's see if I can push up. I mean, if this to really get going, there's the trend line there that created that push to the upside there. For this to get going, it's got to close above 47. and then we might see a move to 50, 54 if that happens. But in the meantime, it just cannot. The volume is very low. It keeps closing lower. It's a very negative, very bearish weekly chart. We have a divergence coming up in the 4 hour. 4 hours a pretty nifty chart to look at if you're trying to get a position on a long swing trade. Okay, so this bottom fib level, bottom of the fib zone here, that's the 50%. What am I talking about? Yeah, 50%. Okay, we're holding 50%. So in the 4 hour chart, you close above 45 could trigger a move into 46.50. But 47 is the big number for that to close above if that is to do anything to the long side. Alright, Traders Roundtable will be on key stock sectors, and we're just going to count some waves, get more and more used to Elliott Wave just to see where we are on some of these key charts. Alright, I hope that helps, and see you at Traders Roundtable on Monday.